and all. This is Dr. Sivaraman of iknowindices.com. So for the fresh week, I'm going to give you the Asian Session Live Market Analysis webinar explaining the derived forecast for this week and also the levels in which the currencies could trade in this week. And also I'll fine-tune the forecast using the market reading technique and try to explain to you what could be the possible moves in the market and what are the possible trades we can choose and try to earn from that of the market. Now, first of all, we'll go to that of the derived forecast. As you see that we have entered into that of the second week of this new year from 12th to 16th. And in this week, still you come across the market is very volatile. And last week we have seen for the non-farm payroll, they made the gain and the drop and the gain. That sort of moves, they had done it in the case of Euro and GBP and also in USD yen. And ultimately, they are not gone to the extreme high or extreme low. So they are here to accumulate the buy positions. The players are here for the year beginning, accumulate the buy positions. How they do it? They do the lower level consolidation with frequent downward stop-ins. So lower level consolidation with frequent downward stop-ins could be seen till the early part of next week. As I explained last time that 22nd, we have the ECB press conference, and almost closer to that time frame, the players will try to accumulate the buy positions, holding the market at the lower level. And later on, they are expected to make a decisive gaining moves in the market. And many are of the opinion that Euro could come to that of parity because of the European conditions, etc. And you know that about a couple of years back, people are talking about the Greece problem. And at that time also, we heard that Euro could come to parity. But what the players have done, they accumulated using such market sentiments at the lower level Euro positions and gained Euro to 1.41 level and then build sell positions. And subsequently, now they have made that drop to that of 1.20. And from there, they have come down to that of 1.17 level in order to accumulate more and more of the buy positions. And, you know, they will not be able to hold the market on one particular level like 1.23 and accumulate the positions what they require. And for that, what they have to do is make about 500 to 600 pips drop so that those who take the bottom fishing or the lower level buy positions also liquidate the long positions and turn short. So once such traders turn short, then what happens? The players are in a position to gain the level with the least selling pressure because nobody is holding the long position excepting the players. Then subsequently, when they gain, traders tend to take sell positions thinking that it is a bouncing, a dead cat bouncing effect or the pullback or sell level. So they try to take sell positions during such pullbacks. And then the players continue to gain the level, induce them to do the short covering. So this is a story you come across every time. Still, people don't realize about it and they continue to give the talk in a bearish and the bullish sentiments. And we know very well the players create the market sentiment and act against that of the traders who are committed positions. Now, this is the expected market move for this particular week. In this week also, they are expected to make either way moves in the market with a little bit of upward bias. So they will try to, they have done the firm up and then they are expected to make the slide and again firm up during the European session and slide during the US session today. And then tomorrow, they are expected to firm up during that of the Japanese and the US session and slide during the European session. Then on Wednesday, they are expected to gain the level quickly during Japanese session and start making the slide. Then on Thursday, they are expected to make the slide during the Japanese and the US session and firm up during that of the European session. And on Friday, then they are expected to gain the levels during Japanese and the US session and slide during the European session. So they will try to give either way trading opportunities. So whenever there is a slide, you can take a buy position and book profit during the firm up. Don't wait for the next session. Then probably they may come to that of the entry level again. And similarly, after firm up, you can take a sell and then they will make the slide and you can book profit. Aim for only swing trade profit of 30, 45 pips and try to do small trades during this particular yearly trend reversal time. So year beginning trend reversal, they will continue till that of the next week. And afterwards, you'll come across, they will try to make the month end, the last week of the month of January, they will make the month end trend reversal. And then subsequently, we'll be able to see that the market is making upward move in the month of February onwards. So that is what expected in the market. So till such time during the yearly trend reversal, aim for only swing trade and don't think of position trade. Now with regard to the levels in the market, the expected range in this particular week, they may come down to that 1.17 area and then the high could be 1.2150. So lower level swing and that may lead to that small rise during this particular week. And the range in which they are expected to make swings in the case of GBP is 1.50 to 1.55. And you know the drop in the case of GBP, they mainly do it in order to create the market sentiment. And USD Yen, if you notice it carefully, they are now trying to make either way swings, not one-sided rise. What they have done on Friday, they gained the level and then subsequently made the drop after that of the non-farm payroll and then gained and then finally they made the drop again. And that sort of whipsaw moves, they had done it in the case of USDN, mainly to offload their long positions at the higher level. Then they will come down to the 1.17 level and try to accumulate the buy positions holding that. And at that time, the traders might see technically it can go to 113 level and try to take sell after the drop. But later on, the players will accumulate the buy position and continue to gain it to 121 and above. In the case of USDN, and you know that you have to be very careful. It can make the contrarian move like drop along with that of Euro and GBP, or it can make the USD gaining or the USD weakening move in tandem with that of the Euro and GBP. So in tandem with that of Euro and GBP, when they make that, when Euro makes the drop, USD Yen will make a rise. And when Euro makes the drop, USD Yen may make the drop, and that will be the contrarian move, making the USD weakening move in the case of USD Yen when compared to that of USD. Euro is making the USD gaining move. So that sort of contrarian moves are bound to happen in this case of USD Yen. So trade with caution. Only when they make quick moves and stop cutting the new low for more than 30 minutes, you can take a buy position. And similarly, when they quickly gain and stop cutting the high for 30 minutes, exit out of the position. In the case of CHF, they have come to that of the parity and above. They went up to 1.02 level last week, and they are expected to make the range around that of the parity here. And so far, they are holding around that of 1.01, and quickly they could make the drop below that of parity and then gain again in the case of USD CHF. Then in the case of Canadian dollar, they gained the levels to that of 1.1875 level, and then subsequently they are expected to make the slide to that of 1.1413 level, and then they are expected to make the wide range high level swings. Then in the case of Aussie, if you notice it carefully, that after making moves around that of 0.80 level, they started gaining it. And then they are expected to gain some more and then make the drop again, a wide range swing to start with. and then subsequently they will continue to gain the levels in the case of Aussie ahead of Euro and GBP. The commodity pairs during the trending time lead the market and lag behind later on. That sort of moves are expected in the case of Aussie this time, but USD CAD is expected to make the wide range swings at the higher levels. And sometimes it might make the move along with that of US dollar, and certain other time it might move against that of the US dollar. And that sort of moves you could come across here. And that was seen earlier in the case of USD-Yen, and now you'll come across in the case of USD-CAD, that sort of moves. Now coming to that of the market trading technique, they set the initial highs and the lows around 3:30 GMT in the market. And now currently, let us compare the live market code page with that of the levels noted down by 3:30 GMT. So Euro formed the low 1.1846 and the high was 1.1870. They are not breached the low or the high. And in the case of GBP, 1.5164 was the low and they just breached and formed 1.5160 and it is holding below that of the initial low, and then 1.5194 is the high. So you can understand that GBP, they wanted to make the slide. As I explained, in the case of Japanese session, they are expected to make the swing and slide move. And in the case of Yen, 118.13 is the low, 118.51 is the high. They are not breached the low or the high. Then in the case of CHF, 1.0118 is the low, 1.0139 is the high. They are not breached the low or the high. In the case of Canadian dollar, 1.1841 is the low, 1.1868 is the high. They are not breached the low or the high. Then Aussie also, 0.8208 is the low, 0.8244 was the initial high. They breached and went up to 0.8252. And now around that of 8244. So they made a brief upward stop, and you know that in the case of GBP, they cut the low and staying below that of the initial low. In the case of Aussie, they cut the high and went up and then come down a little bit, and they are likely to breach the low, likely to breach the initial high and come down. So watch how exactly they are making the moves, and accordingly you can take the positions. And as I explained, that you can commit positions once the spread becomes the low and the high is more than 40 pips in any given pair. There, if you commit the position, buy near that of the low or sell near that of the high, you will be able to see a definite profit. That's what I explained in this market reading and trading page here. So near that of the high, when the high is not been breached from the start of the session, we try to take a sell position, not near the low. But if you also take the sell below that of the initial low as a technical trade, once the market breaches the low and stay below the low for more than 30 minutes to 2 hours, then we try to take sell position. Like in the case of GBP now, they are around that of the initial low. If it is not coming above, then we can take a sell as a technical trade. Then keep 30 pips above the buy hedge order or the buy stop order. And once the position makes profit, you can move stop to entry and remove the hedge order to limit. And thereby you are able to incur no loss in the event if the market goes against you. And then subsequently, when they continue to make the drop, you can trail the stop in the profit making position and also keep about 45 pips limit. Thereby you'll be able to easily book profit. Now these are all the market timings. So those who are familiar with that and understand that now we're in the Japanese session. The Japanese session will get over by 7:30 GMT. Then 8 to 14 GMT is the European session, 14:30 to 21:30 is the US session, and in between you come across the gap time. During gap time, they make the false move. During that of the early and the late sessions, they make big moves in the case of majors, and during the mid session, they make moves in the case of crosses. So if you intend to trade in crosses, then choose the mid session. The timings you can make a note and try to trade. And if you want to do the trades in the case of the majors, then take the position during the early session and book profit during that of the late session. Mid session, they may make sluggish move as far as the or small swings in the case of the majors, but they may mostly make the contrary move, like gaining the level in the case of euro and dropping the level in the case of GBP. That way, they are able to handle the crosses like euro, GBP. Similarly, gain the level in the case of euro, gain the level in the case of USD, and that they could do it during that of the mid session in order to gain the level in the case of euro, yen. So understand that and try to trade during that of the mid session the crosses. So any major, when the spread between the initial high and the low is more than 40 pips, you try to take position. And in the case of crosses, when the spread is more than 70 pips, you try to take commit positions. Otherwise, you may have to hold the position for a longer time. That may test your patience. Now, the next Asian session webinar, I'll give it next week. And you know that the follow-up webinar on Thursday, I will not be able to give it because it is a festival time in South India. Here we call it as Pongal. So I will not be able to present the webinar on 15th. Instead, I'll come back on 19th, next Monday, and give the Asian session live market analysis. Tomorrow, I'll be doing the monthly twin webinar tracking the forex market together, part 1 and part 2. Part 1, I'll give it during the early start of the European session from 8 to 8:45 GMT. And the European session will get over by 14 GMT. Then I'll give the second part of the webinar, and it will be from 14 to 14:45 GMT. So during the gap time and start of the US session, I'll present the part 2 of the webinar. So I'll explain to you how the trading has to be done following the market using the live market code page, understanding the type of moves they make it in the market, and then I'll show the results of the trades during the second part of the webinar, and you can easily understand how we can read the market at ease, so that when you spend less time in reading the market, you will be able to patiently trade and earn from that other market. Because many of the people of the opinion that once the analysis is very sophisticated, they are sure of making the money. But it is a wrong notion. It can be a very simple analysis. Still, you will be able to earn very big money. And also, one has to give importance to that of the trading strategy. Most of the people are of the opinion that the analysis or the forecast is vital. But if you understand the trading strategy well, that too using the hedging, then you will be able to earn on either side moves of the market. And that is the advantage of learning the trading strategy well using the hedging. And even if you don't have the hedging facility, still you will be able to trade at ease, provided you choose the quick moves in the market. Whenever they make quick moves in the market, if you commit positions as a counter trade, you'll be able to see that you are able to quickly book profit in a matter of about 30 minutes to 1 hour. So that way, without hedging, you'll be able to earn from that other market. But the only thing is, you have to wait for the opportunities. Many of the people have got the opinion that they have to commit the position, otherwise they may miss the market. There is nothing of that nature. Actually, if you wait for the good opportunity, when the opportunity strikes, if you commit position, in a matter of few minutes, you will be able to book sizable profit. That too, during that of the data release time, and also during that of the early and the late session. Many of the people contact me during that of the mid session and say, okay, now the drop is over, the market has come up. Can I commit position? If you commit positions, you can aim only for about 15-20 pips profit. But during a quick downward move, when they stop cutting the low for more than 30 minutes, if you commit, then you will be able to quickly gain about 45 pips. But after the rise, if you commit position, you can earn about 10 to 15 pips. But they simply wait for more profit to come. Then the market goes down again. Then they say, I am hedged. So ultimately, our mindset has to change. Then you find that consistently we'll be able to grab profit. And for that, you should get rid of the fear, market fear, and also the greed. Once the going is good, immediately you become greedy and try to earn 30, 40 pips or 60 pips, 70 pips, but the market shows only 10, 15 pips profit and comes down. In that stage, the best way to hold the position is skip stop at entry. If they hit the stop, doesn't matter. The position will be closed with stop at entry so that you don't incur any loss. But if they go against, then you have to wait for another session for them to take up the market. So instead, try to keep stop at entry once the position makes profit. Please follow that carefully during that of the yearly trend reversal time. So I'll take up the question and answers. So the questions which are asked in the chat window, I'll try to answer. Okay, Oren has got a Blacksmith has got a question. How do I know weak beginning false move? When operator will make weak beginning false move to downside? Actually, now we are in the first month of the year, January. So during that time, primarily they will be making the yearly trend reversal move. In that, the weak beginning false move may not be very significant. So you have to follow the yearly trend reversal moves and then try to take position as swing trades. And Aditya, so thanks for the wishes, Pongal wishes, Aditya. Then Will has got a question. Since we note down the high low around 330, this is during mid-Japanese session. If we are to trade the majors during the Japanese session, should we wait until the end of the session? Yes, sir. You have to wait till the late Japanese session because most of the time you would have noticed that they would not have improved the spread between the high and the low during the Japanese session. It might be about 30, 35 pips and things like that. So the best thing is wait for them to increase the spread between the high and the low for more than 40 pips. Then commit positions during that of the late session. So suppose in the case of GBP, they want to make a drop. Now they are holding GBP below that of the initial low for more than 30 minutes. And now during that of the late session, what they will do around 5:30 to 6:30 GMT, they will try to come above that of 1.5164 and 67 and don't sustain there for 30 minutes. Instead, they will immediately come down and hold around that of 5160, 5162 like that. That shows that they wanted to make further downward move. Then take a sell position during such pullback. You'll be able to see you can easily keep stop at entry. Whenever the quick move happens during that of the late session, you commit positions. If they are not making quick moves, then calmly wait for the good opportunity. They have to make such quick moves in the market once a while. Aditya, you may note high low around 003 GMT to trade a session. So let me explain to you, 3:30 GMT, they set the initial lows and the highs for their convenience. The players set it. So it is not my own choice that is 0030, we note down the initial lows and the highs because the players have got a different system in order to understand whether the traders are committing buy position, committing sell positions, and based on the sentiments, what they create in the market. Then subsequently, they make the moves in the market against the traders. So for that, they set this initial lows and the highs by 3:30 GMT. So we can only follow that. So we can't choose of our own time because we are trying to read their language. So if you want to read that language, then there is no question of translating it. We have to learn their language and understand. And Lamshali. So week beginning false move is the rise for the majors, including Aussie. Yeah, week beginning false move will be a gain in those currencies, and then subsequently they are expected to make the slide in a big way on Wednesday, midweek. And then Vishwanath, today Japan is holiday. Does this have any impact? See, normally whenever there is a holiday, the other countries are working, and also the banks in other countries could take up the positions and liquidate the positions, etc. And especially as far as Japanese yen is concerned, it will be very active during that of the Japanese session. If it is a holiday, then it will be very active during that of the US session because predominant of the transactions happen during that of the US session, and they position themselves before the start of the Japanese session the next day. Then actually, has Aussie already done its extended stop and yet during yearly trend reversal? Aussie 0.80 could be the low. Beyond that, it may not drop. And they are expected to consolidate from that of 0.8050 to 82 level and then quickly go to 83, 84, 85 level in the coming months. Then there are some questions. Gregor has got a question. We can read a lot about Aussie New Zealand cross sub parity. Okay, Aussie New Zealand, you know that they are the currencies in the respective countries, Aussie and New Zealand, and primarily traded during that of the Asian session. So Aussie New Zealand, they make the contrary move sometimes, and they make the USD gaining or the USD weakening move on certain other time. So accordingly, we have to do it. And so coming to the parity is unlikely. Then Ali, would you please open option about USD yen for binary for today? See, I don't encourage traders going for the binary trades. And, many of the people think that you'll be able to make net profit in the binary. But actually, they are all controlled by that of the brokers. So such brokers, what happens when euro is gaining about 40, 50 pips in the actual market, spot market, in the binary option, they may gain about 10 pips and your binary position might be taken, you may not be able to book profit. So the CFD and also the binary options, etc., they are all mainly to earn from that of the traders at ease when they are trading with small money. So no more questions. And I'll show the forecast again. So this is the second week of January. The market is expected to make the firm up and then slowly make the slide during the midweek and make either way moves on Thursday and Friday. The next week also, they are expected to make the yearly trend reversal move like this week and the last week. And then subsequently, you might come across after that of 22nd ECB press conference, the players could make visible gains in the market. On 22nd, they are expected to make a very volatile moves in the market. They could show some extreme levels in the case of euro at that time, but quickly gain about 200 and 250 pips on that day after the ECB press conference. So be careful during such time. They are expected to make the extended stop and then reverse the market in the case of, especially in the case of euro. And then Friday, next Friday, they could gain more visible, more visibly on 23rd of January. And from that time onwards, you could come across the market showing the USD weakening moves. So tomorrow I'll come back and give you the track in the Forex market together webinar. And please come for that. And I'll explain to you how exactly during this yearly trend reversal time we can do swing trades in the market. Thank you one and all. Wish you all very happy trading. See you tomorrow.